Hi guys, thanks for tuning in to another episode of Nuggets News. We're back with our monthly mining update, and this month we're going to have a bit of a look ahead, the same as we've been doing with our other episodes, a bit of a forecast and predictions on what's going to happen in the mining market. The guys over at MiningStore have had a few changes to what they're doing, and it's probably a bit of a theme of what's happening around the world from what Will was telling me before. So we'll dive into all that. But how you going, Will?
Yeah, really good. It's good to have a chat in the pre-interview and recap everything that's gone on. We could have spoke for about 2 hours if we tried to get all of it in the one chat. But no, it's been really interesting. As you said, there's been some changes in the mining strategies that we've been deploying at the moment. We've got some new facilities set up in Europe, which has given us access to some even cheaper power, which is awesome. And overall, as you said, it'd be good this episode to go in and look at a bit of a projection for 2021 and everything that we've got set up going forward.
And since we last spoke, Bitcoin's been on a tear. I remember those episodes we were doing, months ago when it was around 10K, and we had some of those pictures, which we'll show again now, about how you're basically losing money, and now these Bitcoin miners are making so much money. So that's probably going to be a focus of today as well, because that's really interesting what's happening and what we're seeing in the data as well. So do you want to say anything before we actually get into all the slides about that?
Yeah, 100%. Like I went through some of the videos we went through, and I know you and I were harping on it, and it can seem really weird to, newbies or people on the outside when we're talking, there's miners literally mining this crazy asset, digital asset of the 21st century at a loss. And, now it looks a lot more understandable when you can see that there's completely shortage of supply of miners. Now they're sitting on these big mining farms. They've got everything set up and earning, excess of $20 a day on their miners. So, it's one of those crazy industries. When you look back on things that we project earlier, it can seem really crazy. Same thing as in 2008, no one would have thought Bitcoin was going to, $20,000 in 2017, or no one would have thought it was going to $40,000 now, but it does. And, these things keep playing out. So we'll look at that in more detail. We're going to look at things like miners' mentality, what they're looking at over 4-year cycles, and plenty more to go through as well. So yeah, looking forward to it.
Cool. Okay. So where are we? Parabolic predictions. Every time the chart looks parabolic, it seems to go more parabolic. You mentioned that hash rate analysis that we normally cover, the revenue, the mentality of the cycle, and I guess the psychology and sentiment. It's all the same for miners as well to a degree. You touched on how you're getting into ASICs, and I can't think kind of everyone is, because at the moment we're hearing things like chip shortages for all sorts of computers as well as the miners. And you're going to talk about FPGAs and what's going with the altcoins. Anything else you wanted to touch on there?
No, that's pretty much a perfect recap of that slide there. Obviously, it's important for us to take care of the views of the MiningStore members as well. And there are a lot of people out there who had bought into FPGA mining. And so we are going to look into the FPGA mining. Full disclosure, it is a little bit slower at the moment, but we do have some strategies. And also, as I said, important to understand the mentality and that it's a long-term investment. On the happier side, there's obviously the ASIC mining, which is absolutely killing it at the moment, and we do have stock available. So we'll go into that as well. But let's jump into the BTC parabolic price predictions.
Yeah, cool. So is this charts from the Aussie guy, Dave the Wave, is it, that loves this one?
Yeah, I think this one, actually wasn't aware myself there's an Aussie guy, but one of the guys in the mining store community posted in a few years ago, and I've been following it ever since. But if it is an Aussie, then good on him.
Yeah.
But yeah, I mean, it's really, I think there's a few people that do these parabolic predictions, obviously. But this guy in particular, I like how he puts the Fibonacci retracements over, and it creates a bit of a grid so you can understand whereabouts in these, price pools you're actually sitting at. I'm not sure how clear the image is. It's kind of hard to take a screenshot and put it on a PowerPoint, but if you do want to copy paste the source there and bring it up for the members, feel free to. But this is something that I've relied on pretty much every bull run. I relied on in 2017, relied on it during the bear market to understand where the bottom might price in at. And it's something that makes a lot of sense to me, and I want everyone to kind of understand it, particularly if you're getting into mining, so that you understand the 4-year cycles that we go through between the Bitcoin halvings. I mean, so at the moment in this chart that you can see on the left-hand side, if you're looking at the image, the darker section that isn't highlighted, there's obviously some car, big revvy car out the window if you can hear that. On the left-hand side where it's darker, that was where he started his predictions. And then the right-hand side where it's highlighted, if you click the play button, you can see how it's kind of played out since there. And it's followed that parabolic prediction that he shows. Without going into the maths behind it or everything behind it too much, what this would suggest is that right now we're at about the 61.8% Fibonacci level. And we could potentially get, if we got to 100%, to around 100,000. And that would happen around November or so this year. So again, there's no, crystal ball or anything like that, but it's just good to have, different pictures painted in front of you and try have an understanding of what is possible and where we possibly could be at. And just to recap that, my absolute favorite thing about this analysis, as opposed to any analysis that you may see on Twitter at the moment or on anyone's feeds, is, this was predicted, towards the end of last year. It wasn't predicted today, and it's played out quite perfectly along that prediction line since. So nice, accurate prediction. That's what I like to look for. And that's why I'm confident, or have a degree of confidence, that we can at least reach around 100K. But also, as you say in your post just this morning or last night, Alex, you need to be aware of the bearish scenarios as well. It's no guarantee, but it's just what could be possible and a picture of where we're at the moment.
Yeah, I like the fact that he takes into account time as well, and he has been very, very accurate. And a lot of these other, I guess, ways to value Bitcoin, like stock to flow, they've all of a sudden they've all caught up, and they've even, some of them are not even looking bullish enough now for the numbers being thrown around. But what have we seen here since we were last speaking? A bit of an increase in hash rate, but a massive increase in the price. So those miners have gone from losing money to being very profitable all of a sudden.
Yeah, exactly right. And so I haven't put the price in there. I just really want to focus on the percentage increases here. And so we have gone from about 20,000 to 30 or 40,000 in that image, but the price isn't shown there. But as you can see, there's a 65% increase in price, but there's only a 15% increase in hash rate. And that's that message that we were really harping on last year, Alex, all the way through, when we're looking at that Bitcoin production rate. And everyone's asking, why are these miners still mining at, low returns, if negative returns? And it's because that lagging effect for manufacturers to come out and build more miners, and for people to build facilities to actually expand their mining operations. So these are by no means silly people. They've been doing this for a long time, since late 2008 and onwards. They've been starting probably like mid 2015, really expanding out, or even earlier. And they know that what they invest today, they're going to reap the rewards in 4 years' time, in the next kind of bull market or in the next cycle. So that's what we were talking about last year. That's why they had already expanded their BTC mining operations and mining at low or even negative returns at times, because now they're laughing because no one else can actually get their hands on these miners. It's very hard to, or you can pay a premium if you want to. So yeah, really good one there. I really like that percentage difference, and just to really harp on that lagging effect that happens, and why you need to expand earlier rather than wait until everyone's kind of doing it.
I think the other thing I've heard is, it's no longer a China-dominated industry with the chip manufacturing, and now they've got a shortage, and we've seen a lot of hash rate move to America and these other places. So, look, all that's been distributed and decentralized more and more, which is always a good thing. I guess, including you guys, you're evidence of that. It is a risk, though, isn't it? Like, it's the same as investing. It's that risk that people are taking because they believe in the cycle to mine at a loss for a while. And now prices are a lot higher, and that's kind of where, look, miners' revenue's gone up as you've got here, but it's resulting in a lot of selling at the moment, and that's kind of formed a bit of an equilibrium, I guess you'd say, until the buying catches up and OTC orders form that new equilibrium. And maybe we're breaking out now, but we've certainly seen a lot of miners selling and making the most of these higher prices.
Yeah, exactly. And we're going to have a look at that, and why they're selling, and where their mentality is at, and what they need to prepare for in the next coming years. But exactly what you said there. I mean, we, as a business at MiningStore, we run as a community and a business, and we also took a massive risk. I mean, we bought probably 250 to 300 of the S17 miners before the market went up and reached these $30,000 to $40,000, knowing that the stock was just not going to be available. Of those miners, we probably have maybe 30 or so of them left, which we'll be selling over the next coming months. But after that, there's going to be massive premiums on the prices for these miners. So because we do run a community side, we haven't pushed up our prices of those miners as much as some of these Bitmain suppliers have been. I've seen some of the newer models selling for over $12,000, which to anyone out there thinking of buying those, I would suggest not to. You're probably not going to get a return on investment on that. Even you may only be earning 20 or 30 US dollars a day at the best times now with those miners, but when things come into a bear market, you're going to struggle to get that return back. The miners that we're selling at the moment, we are selling at around $5,000 to $5,500, which is a lot more realistic. So, I think at the retail market, the Chinese suppliers are selling the same miner for about $7,000, which shows because Bitcoin's gone up and the demand's there that people are willing to pay that. But we've kind of kept it close to the price that we purchased before the bull run. There's obviously not too much of that left.
Cool. This is the chart with the brackets and the profitability that we've shown a few times. Is there anything else you want to add to what we've already said about all this?
We're on the miner revenue slide, is that right?
I'm on the next one now, but go on revenue if you want.
No, that's fine. Yeah, miner revenue we pretty much covered. It's pretty basic there, but yeah, just again, I really like posting this Bitcoin production rate nearly in every monthly update, just so people are aware of it and can track it. But I think we talked about it throughout, the previous slides. But basically, as you can see now, we're well above that red cloud zone, which is where miners' Bitcoin production rate is, the cost to actually produce Bitcoin, including infrastructure, electricity, and hardware costs. And so, yeah, now we're obviously above that. It's happy days for miners. Returns are quite high. If we go on to the next slide, Alex, this is one that I've seen yourself post on the Facebook, and it's a fantastic resource to be on top of, and seeing when miners are actually selling their coins. Obviously, pretty much all new supply that's from the reserve out of the 21 million Bitcoin that comes into the market is at the first point in time held by miners, and most miners tend to hold their coins throughout the cycles and sell in the next bull run. They don't sell the coins that they're mining today. They hold them and then sell them. Obviously, throughout the period of time, they will make temporary sell-offs or some interval sell-offs to cover power costs and labor costs and infrastructure costs. But the majority of them, they're trying to hold for those top points in the parabolic charts. And that's what we've seen recently. You can see those huge, big candles there in red, which is major sell-offs by miners. And from my investigations and what I've been able to get out of some of the largest suppliers of Bitcoin miners and some of the largest miners that we know, what they're basically doing right now is selling the Bitcoin that they've mined over the past 3 or 4 years and expanding into new hardware to kind of revamp their operations for the next coming 4 years. So basically right now is, I guess, the time to revamp all that hardware, get going. And then what they'll be doing after that is they'll hold off. They'll sit on that hardware for the next 3 or 4 years, sit on the coins that they're mining, and then sell in the next bull run when Bitcoin's potentially at 300, 400K. Who knows what it's going to be? And we can come back to this one if people call us out and say, oh, that's not realistic in 4 years' time.
Yeah, the only thing is I'd say that this makes me, this is a pretty big bearish argument. And this, like the other day, I put up a pretty big post and one of my more bearish updates for members. But, from what you've just said, from this evidence here, I look at the chart on the slide before that, and every time we've gone parabolic and we've got extended away from this cost of production cloud, we've had a big, pretty big correction, and it's mean reverted for a year or so, even to the point where it touches the bottom cost of production. So here we are, and if it followed that trend, that would say that we're about to go into a bear market for a year and touch the bottom of this cloud. So, what would you say? Is there any reason why that wouldn't happen? Do you think we're going to $100,000 first? Because I guess you can argue that back in 2017, yeah, we got extended away from it, and we pulled back a couple of times before we had this huge rip higher. So it can go a lot higher, but we already are a long way extended from that cloud.
No, it's absolutely fair points. And I think the major things to consider is, you can always look historically, and I love looking at historicals and when we reach tops and when we reach bottoms. But fundamentally, I do feel like we are in quite a different market right now than what we were back in those times. The money flow that's coming in is a lot more institutional than the retail pump that we had during the 2017 market. And also, I just think that going right now, I don't think that the institutions that have bought in just recently are going to kind of allow that 1 year cycle to, you know, come back down to much lower than 30,000 is really where my support level is. So I do think the 100K level is a lot more achievable than, say, going back down to $10,000 in my honest opinion. But those are some things to be aware. I mean, we've got Michael Saylor speaking at the moment. I'm sure we're going to get some ears pricked up from some institutions. I think he even said that he's had more CEOs attending to this event than he's ever had before. You know, there's big people out there looking to get positions in now. And I think they're looking for it to go a lot higher than the price is right now.
Cool. Well, we'll chew through these slides, Will. So anything else to add on the outlook here for the FPGAs that we haven't touched on yet?
Yeah, absolutely. So I think the next slide off that was just the outlook for 2021. And, you know, I usually refrain from reading directly off slides, but I think these 4 to 5 points are quite important for people to understand, particularly for people that are going to get started on the mining now and commit to this next 4 year cycle. It's important to understand what this strategy is. Now, absolutely, we are in the cryptocurrency market and things can change. You shouldn't be surprised in 6 months' time if there are small alterations to this kind of strategy. But basically, at the moment, we do have a heavy focus on basically selling Bitcoin at these peaks. So from 40 to 60 to 80 to 100,000, the coins that we have mined over the previous years, we will be selling. And I know big mining operations are selling and expanding that into new miners. Now, when I say new miners, that doesn't necessarily mean that they're straight off the manufacturing line. Right now, we are actually investing into second-hand miners. We're not paying the huge, ridiculous premiums for miners that are going to be released in July batches. I don't see the investment opportunity there. Basically, we're investing into miners that are 6 months old, that are on the market, basically buying them off big mining farms who purchase them, you know, early, if not maybe late last year, and they paid absolutely peanuts compared to what they're selling at the moment. They may have bought, you know, 1,000 to 2,000 miners, and they're willing to sell, you know, 200 or 300 of them and take an instant cash out, similar to someone who bought Bitcoin back at $10,000 and is willing to sell it at $40,000 now. So they're the miners that we're expanding with at the moment. In terms of BTC mining, and that's what we're doing. We're selling our Bitcoin that we're holding into new miners. The second part, FPGA mining, is a lot slower. A lot of our previous mining expansion had been put into FPGA mining. A lot of the guys that started with MiningStore and have been following the strategy since around 2018, if not earlier, had return on investment on the FPGA miners already. And they still should have another 2-3 years life cycle on those miners to this date. But basically, you know, at the moment, the FPGA returns are quite slow because we're in a major coin market. We're not in an altcoin market anymore. So basically, we had powered down some of our FPGA miners and we're putting the power costs into new Bitcoin miners. But at the moment, we have actually ramped all of our FPGA miners back online, and we do have some positive things coming up. An altcoin market is what we ultimately need for the FPGA miners to really thrive, because that will see new coins coming on board and obviously new mining returns. So a bit of a combination of Bitcoin and FPGA mining, but heavily focusing on expanding the Bitcoin miners right now. As for point 3, we've covered that, you know, basically saying that it's a proven strategy over the past over the 4 year cycles, that if you buy the miners at the start, mine throughout, obviously the returns are going to go up and down. But if you commit to that cycle and sell those coins in the peak of the latter bull run, it has been a very profitable investment for us. Point 4. Point 4 basically is talking about we covered that previously on the FPGA stuff. And then the final one is, if we look onto the next slide, Alex, talking about holding the coins through that bear market and selling them at the peak of next run.
Which is what we discussed, I guess, in that slide before, that you're punting on this this cycle continuing higher based on the fundamentals. So the slide after that, you've got the profitability per day. You talked about before how it's kind of jumped. If you've got a good machine, you're looking at like $20 a day sometimes.
Yeah, exactly right. So the first one there is in October, and that was a screenshot from one of the previous slides that we'd had. And we were looking at 110 terahash miners with zero power consumption, which is very rare. Not many people have zero power consumption, but it's interesting to see what pure revenue looks like. And back in October, we had pure revenue of around about $9 per day. With low power cost, which is pretty close to the power cost that we can get in our facilities. We can't quite get the 5 cents. We're at about 7 US cents is what we can get. But for these big miners that are mining with 2,000 to 20,000 miners, they can get 5 cents or probably even a bit lower. And they were earning about $5 profit per day after that. If we look now in January, if we're taking a snapshot, and again, just to harp on that, this is largely because of that lagging effect where Bitcoin's price has gone up and the coins we're mining are worth a lot more, but there's a lot less percentage increase of competition. So basically, now we're looking at on the zero power consumption of a profit of a revenue of $20 a day or $21. And in terms of low power consumption, I've actually put our facilities cost in this one as well. So putting the 7 cents in there, so it's a bit more accurate to what we are literally earning at the moment, and it's closer to that 15, and it has been as high as even $20 a day. So yeah, it's really good, really great time for people that have got a lot of Bitcoin miners on to be selling those coins at these highs and expanding and kind of compounding out their mining farms.
Exactly, and that's what you got on the next slide here. I think we've covered pretty much all this about expanding the farms, and the price keeps going up in all these different batches as long as Bitcoin's price keeps going up. Anything to add there?
No, I think just basically, I mean, if people want to read the points there, I just left it there for Nuggets members that are looking to get into the Bitcoin mining. They understand how the supply chain works. So just have a read over those points and understand that when you do inquire with us or you're speaking to some of our account managers, that this is pretty much how the order works. And don't be surprised if there is a bit of a backlog. We do our absolute best to secure miners for our members at the cheapest possible price, and we're not interested in basically selling miners to them at prices at $12,000 that we don't think they're going to get a return on investment back at. So we rather take our time a little bit, wait for the right miners to come on board, and ultimately help people expand with miners that they should be able to get a return on investment back on.
So FPGAs, you mentioned before that at the moment it's low. You're kind of waiting for the alt market to heat back up again. So I guess you've got to sit on your hands a little bit, like in crypto winter when alts aren't doing much. I mean, the outlook's still positive, I guess. Like the altcoins always come back in the different cycles, in ebbs and flows. Anything you want to add there?
I think the main point here is there is actually quite an opportunity. I mean, for savvy investors that do understand how the cryptocurrency market works, or for previous FPGA miners that have seen low returns, and then the next month it goes to $30 a day, and it really just depends on new coins coming out and alt markets. Again, we are in a major coin market. I don't think we have really tapped into the altcoin market just yet, and there could be a great opportunity to purchase some of those people, without putting too much of negative connotation on it, with weaker hands who have bought some of these FPGA miners that are a bit more expensive, not seeing the future of mining FPGA mining returns getting higher, and they're willing to sell these miners at quite a discount. MiningStore has purchased back quite a lot of secondhand miners, and there is an opportunity for other people out there. If you are interested in buying secondhand FPGA miners, we do have some available. But yeah, that's pretty much the major points there. Just understanding that we're really basically relying on altcoins. There is actually some really positive news coming forward for FPGA mining returns. We have a coin that previously dropped off, Teller, TRB, which is kind of similar to Chainlink in what they're trying to achieve as an price oracle coin. They're actually coming, they dropped off. They weren't mineable for a while. They're actually coming back online, which is going to spread the competition from Digibyte. So that's going to be a positive, hopefully, to increase Digibyte returns and Teller, as not everyone's mining the same coin anymore. And we also, as I say, once we come into that altcoin market, should see some high returns coming through as well.
Oh, cool. There we go. Unmute. And we've got some pretty big machines here. The ETH ASICs, they're well, a lot of people punting on them. We've started to hear those conversations about cutting out proof of work mining and phasing that out. So, what's going on there? What are your thoughts on the ETH mining?
Yeah, so the eighth one in particular is an interesting one. I think, Alex, I read in one of your posts the other day that you don't always get it right. And I wish I went heavier on the ETH mining. I kind of looked at it as there was a cutoff time for when ETH mining was going to move to proof of stake, and these things would turn into doorsteps. But we did source quite a few ETH miners for some clients, and they've done really, really well on them. The returns on these things have been like $50 US, if not more, a day at times. Some of them almost returned their investment on the miner that they bought, and they've still got potentially a year or two maybe ahead. I'm not actually 100% sure. You might be able to comment better than I there, Alex. But it's been a crazy investment right now. I could be wrong, but I would say that these miners are too expensive to warrant the risk to reward now. But there is a new model coming out for the A11, so that's the A10 that you can see there, and potentially we may be able to get our hands on some at a price that might warrant the risk. So if that's the case, I might be able to give an update on next month's episode. But yeah, I mean it's crazy the returns that these things are getting at the moment.
Yeah, I think a future episode would probably be on what's going to happen. With the Ethereum Classic, are we going to see a hard fork? And miners have started to kick up a bit of a stink at the moment, even cutting out the burning some of the fees. They're starting to complain, but they are like making a fortune at the moment, and it's not fair. It's not sustainable. So something is going to change, but it's always hard to take something off someone when they've been getting it and having it so good. But
Yeah,
yeah,
it's a really hard thing with the market, isn't it? Like, obviously the Ethereum as a project, they need to look at that and go, okay, these guys are making way too much money, but at the same time, they made investments to a degree support the project by providing hash power. I would hate to be the one making the final decisions on these things, but I suppose that's the power of decentralization, and everyone gets a bit of an input, and the outcome, most people hopefully will be happy with. But that's pretty much most of the slides there, I think, Alex. The last slide is just a recap and just explaining, if people want to go back to slide 9, which has that green basically bar across the middle section, and talking, it's basically outlining the 4-year cycles and the miner's mentality throughout it. I just think if people are getting into mining, you really, really need to understand that and not be in this mentality that, oh, I'm making $20 today. Okay, sell those coins. And then, when you're making $2, you're still selling those coins. The majority of what you're doing as a miner is letting the miner play out this dollar cost average strategy, where it's mining some Bitcoin at 30,000, some at 40, some at 10, some at 20 over the cycle. And then ultimately in the next cycle, after the next Bitcoin halving, that's when you're selling off those coins and selling some off to cover power costs and things like that, but holding the most of it.
Yeah, and it all becomes part of that self-fulfilling prophecy, whereas, if there's people accumulating and miners are hodling, then that puts a floor in the price, because there's just gets a point where no one's selling, and then we start to go up, and here we are, really high prices. Miners are selling, but they are selling into demand. We're seeing some big OTC orders come through on Coinbase still. So, hey, hopefully, like we said, that demand is going to be met. They've sold all of their coins. It looked to me like the worst of it was over the other day, so I'm hoping that is the case. And onwards and upwards. I think we can easily go to 70,000 in this next leg, and then I'd love to consolidate for a while, and then maybe get to 100, 200,000 in this halving cycle.
You just don't know, do you? But I think the first comment there, I do think the majority of the big sell-offs, I think, is done for the miners from what obviously I don't have a direct line to the biggest miners out there, but I do know quite a few people that are in the substantial numbers, and they're kind of, the word from them was saying that they're basically selling off to prepare for purchasing that next line of miners, cover some costs, and obviously take some profits as well. I mean, you'd be crazy not to, holding it for 4 years below, below 20,000 even, to not take some profits here. But they also are aware that we could easily get to 100,000, and they are holding for that in case as well. So, great episode, Alex. So hopefully that outlines to everyone a bit more about the strategy, the long term. A lot of previous episodes have been explaining just the basics of ASIC miners and FPGA, and I think most of the followers now have a good understanding of the overall structure of what's going on here. So a bit more, intent on the strategy there and an outlook for 2021. Of course, any questions, put in the YouTube, and I'll answer them in the next episode. But yeah, all the best, Alex.
Awesome. Cheers, guys. Yeah, let us know if there's anything else you want us to cover during this year, specific episodes or like guests we can have on. We might try and get someone from Bitmain or something like that. But yeah, thanks, Will. I'll put the links to follow the guys at MiningStore down below, the discounts if you're interested in the mining gear, and we'll see you next month. So cheers.
Cheers, Alex.